All right, so now we're going to pick up off from where we left off. Gifts to charity section. The O'Sullivans gave $987 to different charities. The highest amount they gave to any single charity was $100. They also donated $450 worth of old clothes to different charities. The most they gave to any single charity was $120. Find the total of their charitable contributions. All right, so since none of the amounts were over $250, we're going to put that total right here, 987. And then number 12, other than cash or check, the clothing that they gave was a total of $450. So we're going to put that on line 12. And there was no carryover from the previous year. So we're going to simply combine lines 11 and 12 to get a total for 14. So 987 and 450 is 1437. So that's their gifts to charity. So the O'Sullivans' total charitable contributions totaled $1,437. So the next section is casualty and theft losses. And they want us to use form 4684, which is this one right here. All of these forms can be found simply by going to the IRS website. Now, the O'Sullivans had $11,230 worth of flood damage that was not covered by insurance. Find their casualty deduction. Now, just for the sake of understanding, we're not going to fill out all the details. We're just going to get the deduction. So we're going to start at line 10, and we see that the loss that they had was $11,230. Now, on line 11, it says enter $100. And then on line 12, we're going to subtract 11 from 10. So that will take that $11,230 down to $11,130. All right, so we're going to just transfer this amount down to line 14 because 13 doesn't apply. And then we're going to jump down to 17, which says we need 10% of the adjusted gross income. If you remember from before, the adjusted gross income was $97,012. So 10% of that is $9,701.20. On line 18, it says we're going to subtract our 14 or 16, which is just going to be the same as 14. So we're going to subtract these two here, 17 and 16. So let's take our $11,130 and subtract our $9,701.20. So the amount that's deductible is $1,428.80. And this will be the amount that we put onto our Schedule A. All right, so from form 4684, we got the amount $1,428.80. And so that would be the amount for their casualty deduction. Now our next section is other itemized deductions. Example 7. Brian O'Sullivan had $541 in expenses for job travel. This is not for driving to work because that's not tax deductible. This is for traveling in his personal car for work reasons. It is based on the miles covered. Margaret and Brian belong to unions as well and pay a total of $1,439 in union dues. Brian took 2 college classes related to his employment for a total tuition of $2,315. Find their miscellaneous expenses deduction. All right, so we're going to list those here. Travel at 541. We had union dues at $1,439. And we had tuition. We'll put that on this line. And that is at $2,315. And then our total here is $541, $1,439, and $2,315, which is $4,295. It says add the amounts in the far right column for 4 through 16. So let's go ahead and do that. So we need to go backwards to 4, right? And we're going to be adding 4 through 16. Once again, with our calculator, we have $10,000 plus 4,111 plus 1,437 plus 1,428 plus $4,295 for a total of $21,271. Now you'll notice on this form it says that our total itemized deductions is $21,271, and that we need to also enter this onto line 12 of our 1040. So 21,271, 21,271. Now you'll notice that the standard deduction for this married couple would actually be $24,800. So in this case, they should elect to choose the standard deduction because it's a better deal. In other words, they will get a higher deduction by not itemizing their deductions. All right, so in this case, we're going to change that amount, and we're going to put in the $24,800 instead. So they're going to take the standard deduction. And combining these, just copy that over. And then to get their taxable income, we are going to be subtracting lines 14 and 11. So we are going to take that 97,012 and we're going to subtract the 24,800 to see that their taxable income is $72,212. All right, so to figure out the amount of tax owed, what we're going to do is look at their taxable income, which was $72,212. We have that here. And we're going to use our tax table. So 72,212 would fall here. And they are married filing jointly. So that's $8,272. So that will go here. $8,272. All right, so the O'Sullivans both work and they pay for childcare where they're at work. They can get a tax credit of $780 for this. So that will go on line 19. And then we're going to add the amounts from lines 19 and 20. So that's going to go on line 21, 780. Then on line 22, subtract line 21 from line 18. So using our calculator, we're going to take the 8,272 and subtract the 780, and that's going to put us at $7,492 right here. And there are no other taxes, so we're going to just copy that down right here. Right, one thing I didn't take note of is the tax credit for the energy savings, and that's going to go here on line 20. So we have $215 So then that will change these lines. So when we combine our 780 and 215, we have here 995. And then when we subtract that 8,272 and the 995, that puts us at 7,277. And then this would be the total tax owed by the O'Sullivans after the credits. Now at this point, if we had the O'Sullivans W-2s, we would fill in the rest of this form, and then we would determine whether or not they were going to receive a refund or if they were going to owe. Then we'd sign the form and then either e-file or mail it in.